Scope of supply. Finance Act 2021 as amended up to 30th April 2022. Amendments are applicable for our coming exam of November 2022. In this regard, in this Finance Act 2021, there is an amendment with retrospective effect. Scope of supply. Further added a new clause, clause AA, under section 7, subsection 1, stating that is as follows. This one, which says that the activities or transactions by a person other than individual to its members or to its constituents or vice versa for cash, deferred payment or other valuable consideration. How to understand this? I will present simple example. Assume a scenario here. Assume a scenario in a simplified manner, presenting here. If there is a residential welfare association, which is an association other than individual, it has so many members, consist of the association. That association provides the services to members. That association provides the supply of goods to the members, or supply of both to the members is a supply. It may be supply of goods, it may be supply of services. Further, if members of the association provide any supply of goods or services or both, is also be supply. Resulting that what happened? Amendment not only in section 7 taken place with retrospective effect from 1st July 2017 by incorporating clause AA under section 7 subsection 1, it resulted to delete schedule 2 point number 7, which says that a person other than individual provide the goods to its members, treated as supply of goods under schedule 2 point number 7, which is now not warranted, resulting that that particular provision has been omitted, stating that section 7 of the GST Act, paragraph 7 of schedule 2 to the GST Act has been omitted retrospectively with effect from 1st July 2017. By incorporating a clause AA under section 7 subsection 1, the excessive provision under schedule 2 point number 7, which is not warranted, thereby deleted. Got the clarity, my dear friends? Further referring to you from here, Composition levy scheme. Composition levy scheme. How we should understand it? The amendment. Very simple. As you are aware of that, a composition levy scheme for a manufacturer, for a trader, for a restaurant person, or a service provider, other restaurant person, is applicable based on the certain conditions they satisfied. If you ask me, a quick recapitulation of it. A manufacturer, a trader, a restaurant service provider, or a service provider other than restaurant service provider should not be dealt with non-taxable supply, should not be supply interstate outward supplies, should not be supplied through e-commerce operator. These are common factors. And a manufacturer, as a trader, a restaurant fellow, whose turnover in the preceding financial year should not exceed 150 lakhs. In case for few states are considered, should not exceed 75 lakhs. A service provider other than restaurant service provider whose aggregate turnover in the preceding financial year should not exceed 50 lakhs, then they are eligible for opting composition scheme. This is a point which we already referred in our regular class. But here, irrespective of their turnover, they are not eligible for composition scheme. Who are they? We already referred. A manufacturer of ice cream, a manufacturer of pan masala, a manufacturer of the tobacco substitutes, followed by aerated water. These manufacturers are disqualified from opting composition levy scheme, irrespective of the turnover. In this particular list, amendment has been taken place by adding some more points. There are 3 more points has been added here in the following manner. Here if you look here, first one, here they added fly ash, bricks and fly ash aggregate with 90% or fly ash content, fly ash blocks, this one, are not eligible for opting composition scheme. If these manufacturers turnover is only, let us say, 39 lakhs, so what? You are not eligible for composition scheme. Further, my dear friends, they added here bricks of fossil meal and similar siliceous earth not qualify for composition scheme. Further, the earthen or roofing tiles not qualify for composition scheme. Here I would like to bring to notice these manufacturers whose aggregate turnover even for registration, the higher cap of 40 lakhs not applicable. If you are a manufacturer dealing with only supply of goods located in the state of Tamil Nadu, only supply of goods, turnover for registration 40 lakhs. But these manufacturers who are exclusively dealing with the goods not eligible for 40 lakhs of threshold limit for registration, they are eligible only for 20 lakhs. Is clear, my dear friends? Now, the point of dispute comes into picture here, whether the trader of these goods are eligible for composition scheme or not. Strictly speaks, as such, yes, they are eligible for composition scheme. However, if they are dealing with manufacturing activities, then they are disqualified. There is a particular information I brought to your notice with the help of a case law. Listen, my dear friends, a registered person making supplies of the above goods is also not eligible to pay concessional tax under the said notification. In the case of Gulab Singh Chauhan case, the Authority for Advanced Ruling AAR Madhya Pradesh held that preparation of gutka in the pan masala is akin to manufacture on the account of process of preparation being that of mixing of different bought out ingredients and resultant product having a distinct name and use. Thus, the preparation of gutka at the pawn shop for sale is covered in the second proviso of notification. Thereby, both pan masala and goods covered under the chapter 24 are listed as goods for which composition scheme cannot be obtained. A pawn shop wala buying various different type of betel nuts, the ingredients to make pan masala, it became a new product, is a manufacture. So pan masala shop wala not eligible for composition scheme. Take the same into a bakery shop. Bakery shop wala buying the maida, sugar or wheat atta, other ingredients to make a beautiful sweet cake. It became a new product. He is selling that product by manufacturing it. Thereby, that bakery shop will also be not eligible for composition scheme. Keep in mind, a trader means what? What I am buying should sell as such. Meaning, I am buying laptop, selling the laptop. I should not buy the laptop to make it a particular television to sell. Then it become a manufacture. But I am telling you, what is manufacture? The manufacture activity taken place even in the trader hands. The trader is manufacturing of any of goods listed here, right from ice cream to the pot of roofing tiles. If you are manufacturing these items, you disqualify from availing composition scheme, is the amendment. Further, my dear friends, presenting in front of you exemptions under the GST. Under this chapter, we have very minute, sensitive amendments one can expect in the coming exam of November 2022. Yes, presenting here. As you are aware of that, pure services supplied by any person to government, which includes central, state, union territory, or any person provide the pure services to local authority, or any person provide the services to governmental authority, or any person provide the services, pure labor, pure services to the government entity. If that services covered under Article 243G or Article 243W of the Constitution of India, then that services are absolutely exempted. In this area, amendment what taken place here is, I said 4 categories. Any person provide the pure services to government, to local authority, to governmental authority, to government entity. Here, these 2 categories are deleted, meaning governmental authority, government entity removed, meaning thereby any person provide these services, even the pure services, though may be covered under Article 243G or Article 240W, to governmental authority, to government entity, which are taxable. Meaning thereby, any person provide the pure services covered under Article 243G or Article 240W of the Constitution of India to government, to local authority only exempted is amendment in the given case. Now coming to further, what is this amendment speaks? Entry number 3A of the notification number 12/2017 of CGST Act as amended up to the Finance Act 2021. What this amendment speaks? I said pure services. What about a service which involves some material, some of services, some of material, which will look like a work contract? In that case, the value of material not exceeded 25% of the total value of that particular contract. In that case, services provided by any person to governmental authority, to local authority, now taxable. Meaning thereby, the amendment prior to this particular provision prior to the amendment is as follows: any person provide these services to government, to local authority, to governmental authority, to government entity, even though material is involved, it may not be pure service, material involved, that material value not exceeded 25% of the total contract value is also be exempted, provided that contract is belongs to the Article 243G or Article 243W of the Constitution. Here also these two guys, governmental authority, government entity, has been deleted. That means any person provide these services which involve material, the value not exceed 25% of the total value of supply to government, to local authority is exempted, provided that supply covered under Article 243G or Article 243W of the Constitution of India. As simple as that, this amendment. Further, my dear sir, a beautiful amendment here, entry number 15 of notification number 12/2017 of Central Tax as amended up to the Finance Act 2021. Here, my dear sir, as you are aware of that, transportation of passengers by contract carriage, this one, or stage carriage in a non-air conditioned contract carriage, non-air conditioned stage carriages, transportation of passengers by road exempted. This exemption is also available now, but if the transporter provide that services through e-commerce operator and that supplier of the transport of services, though maybe transportation of passengers by road in non-air conditioned carriage is taxable, because you providing services through a e-commerce operator. Who asked you to provide? If you provide these services through e-commerce operator, though you may provide transportation of passengers in a non-air conditioned contract carriage or stage carriage is taxable. As simple as that. Presenting here, provided that nothing contained in the item number B and item number C above shall apply to service supplied through an electronic commerce operator, and such a service has been notified under section 9 subsection 5 of CGST Act, where e-commerce operator liable to pay GST. So in that case, the stage carriage or contract carriage person who provide these services through e-commerce operator for transportation of passengers is not qualified for exemption. If I want to get the exemption, I should not dealt through e-commerce operator, meaning thereby, simple example, my name is Parvin Travels. I am providing transportation of contract carriage, transportation of passengers, contract carriage from Chennai to Bangalore, Bangalore to Chennai, contract carriage. In a vehicle, a bus fully non-air conditioned, there is no air condition. If I provide the transportation of passengers in a non-air conditioned contract carriage, I am absolutely exempted from the payment of the GST. If I provide these services by selling my tickets through e-commerce operator, then my services for which GST liability is on e-commerce operator as referred under section 9 section 5 of the CGST Act or section 5 section 5 of the IGST Act, as the case may be, e-commerce operator liable to pay GST. Thereby the exemption does not arise. Is it clear, my dear friends? As simple as this amendment tax. Further, likewise, entry number 17 of our notification number 12/2017 of Central Tax as amended of the Finance Act 2021. Here, services of transportation of passengers with or without accompanying belongings by point number E is got amended. Metered cab or auto rickshaw, including e-rickshaws. With effect from 1st January 2022, the exemption on services of transportation of passengers with or without accompanied belongings by metered cab or auto rickshaws, including e-rickshaws, shall not be available if such services are applied through e-commerce operator, through electronic commerce operator. Got the clarity, my dear friends? Because if I provide the services of metered cab or auto rickshaw, now it has been further added, including e-rickshaw, provide the services through e-commerce operator, I am disqualified for claiming exemption. Who liable to pay GST? E-commerce operator liable to pay GST. Therefore, question of exemption does not arise even to e-commerce operator. Is clear, my dear sir? Further, sir. Yes. With this, we completed scope of supply chapter, amendments, composition scheme amendments, exemptions amendments. Referring to you now the reverse charge amendments, which are as follows one by one. What are the amendments? Reverse charge mechanism, RCM. Section 9 subsection 5 of CGST Act refers the amendments corresponding section 5 subsection 5 of the IGST Act. My dear friends, just now we come across passenger transport services. Here, passenger transport services, non-air conditioned contract carriage, non-air conditioned stage carriage, as the case may be, provided through e-commerce operator or otherwise services by way of transportation of passengers by radio taxi, motor cab, maxi cab, motorcycle with effect from 1st January 2022. The scope of passenger transportation expanded to include the services provided through omnibus and any other motor vehicle which includes counter carriage or stage carriage, especially non-air conditioned. Such supplies through e-commerce operator. Who liable to pay GST? E-commerce operator only liable to pay GST, as simple as this. Further, accommodation services, housekeeping services, provider of service, unregistered person, provided through e-commerce operator liable to pay GST. It is already there, now also be there, is not amendment. Further continuation. Restaurant services, especially if you refer here, my dear sir, cloud kitchen. Restaurant services provided through e-commerce operator from a premises other than specified premises. Which one is a specified premises? Where the hotel wala providing restaurant services and also providing short-term accommodation, where the short-term accommodation service per day per room more than or equal to 7,500 per day, per room, per person. If so, we call it specified premises. So a restaurant wala other than this category, meaning thereby a restaurant which is there in the hotel, where the hotel accommodation providing accommodation services per day per room less than 7,500 per day per room. In that case, such a restaurant, such a hotel maintaining restaurant, that restaurant wala providing services through e-commerce operator, who liable to pay GST? E-commerce operator liable to pay GST, and the supplier, namely restaurant fellow, is fully exempted from payment of GST. He is not required for registration. Even he already got registered, can apply for deregistration. Who? The restaurant wala, who has hotel accommodation providing services of short term per day per room less than 7,500. Such a accommodation carrying restaurant, that restaurant providing services of restaurant services through e-commerce operator. Per day per room of that accommodation where the restaurant is located should be less than 7,500. If a hotel accommodation which has restaurant, but accommodation where they are offering 7,500 above per day per room, in that case they are liable to pay GST, not by e-commerce operator. Now a question may going to come here. Sir, a restaurant service, no accommodation, only restaurant providing services through e-commerce operator. That means restaurant which has no accommodation facility. In that case, restaurant fellow liable to pay GST. If a restaurant person, I will tell you here with the example. My dear friends. I will go with the example. More clarity. Restaurant wala supplying restaurant services only through e-commerce operator. No other accommodation services are there, nothing is there, no other activity is there. Only I am cooking the food in my place where no accommodation. Question of 7,500 above per day per room does not arise. Such a restaurant cooking the food, supplying through e-commerce operator. Such a restaurant free from even registration. That means not liable to pay GST, not liable for registration. If the restaurant has some other activity of selling some other goods also, in that case their aggregate turnover, which includes restaurant services, exceeded the threshold limit of 10 lakhs or 20 lakhs as the case may be, liable for registration, and they are liable to pay GST for the supply other than restaurant services. Restaurant wala liable to pay GST. Means a restaurant fellow having his premises, not only restaurant providing through e-commerce operator, but also selling some of the other goods on his own. In that case, aggregate turnover exceeded the threshold limit, liable for registration. Then that restaurant has to pay GST for that particular supply other than restaurant services supplied through e-commerce operator. If a restaurant fellow providing exclusively restaurant services through e-commerce operator, restaurant fellow not liable for registration. Even if he has registration already, he can apply for deregistration. Got the clarity, my dear friends? And clarifications has been given in the given case by CBIC. There are so many clarifications. What is the first point? I will tell you. E-commerce operator now going to pay GST under section 9 section 5 of the CGST for restaurant services provided through their channel. In that case, are they liable for TCS under section 52 of the CGST? I am telling you, section 52 of the CGST is applicable only to e-commerce operator who is not paying the GST under section 9(5) of CGST, nor under section 5 section 5 of the IGST. That means a e-commerce operator who pay the GST under 9(5) or 5(5) of CGST or IGST respectively, he is free from TCS. Then which e-commerce operator liable to pay GST of TCS? A e-commerce operator who is not covered under section 9(5) or 5(5) of CGST or IGST respectively, then such e-commerce operator liable for TCS. Now in the given case, cloud kitchen services, namely restaurant, cloud kitchen service provided through restaurant, means the restaurant were providing services only through e-commerce operator, no other activities. In that case, who liable to pay GST? E-commerce operator. He is going to pay full amount of GST. Question of TCS, tax collected at source, doesn't arise. Further, point number 2. Would e-commerce operator require to have separate registration to pay GST under 9(5) or 5(5) of the CGST or IGST? Absolutely not. Whatever registration he has as e-commerce operator, it is sufficient to pay the GST under reverse charge. Further, point number 3. Would e-commerce operator be liable to pay tax on supply of restaurant services made by unregistered persons? Obviously. If I am Mr. Raman providing restaurant services through e-commerce operator, Raman is an unregistered person providing restaurant services through e-commerce operator, who liable to pay GST? E-commerce operator only liable to pay GST. Even though the supplier of restaurant may be unregistered person, so what? E-commerce operator, you liable to pay GST. Further, point number 4. What would be the aggregate turnover of the person supplying the restaurant services through e-commerce operator? Raman provide the services of restaurant services through e-commerce operator is Raman services only, which is taxable in the hands of e-commerce operator, thereby exempted in the hands of the Raman. It is the turnover of Raman only. Further, point number 5. Can the supplier of restaurant service made through e-commerce operator be recorded as inward supply of e-commerce operator, liable to reverse charge GST or 9, GST or 3B? What is it is, you know, sir? Raman, supplier of restaurant services, supplied through e-commerce operator. E-commerce operator paying the GST under section 9(5) of CGST, as if they are provider of restaurant services. In that case, e-commerce operator should record in the GST or 3B return these supplies as their inward supply? No, because e-commerce operator is a mediator in between Raman, restaurant service provider, and the customer. Therefore, it is not required to report in the GST or 3B return of e-commerce operator as his inward supply. It is not an inward supply of e-commerce operator when the supplier of restaurant services provide the services to customer through e-commerce operator. Therefore, e-commerce operator should not report it as their inward supplies. Further, point number 6. Would e-commerce operator be liable to reverse proportional input tax credit on his input goods and input services for the reason that input tax credit is not admissible on restaurant services? Why input tax credit not admissible on input services means, on restaurant services means, they are going to pay the GST 5%. If the restaurant wala paying the 5% GST, not eligible for input tax credit, not eligible for input tax credit. Good. E-commerce operator now paying the GST under section 9(5) as they are providing restaurant services. Are they reverse their input tax credit? Not required. They are going to pay the GST and reverse charge. Pay by electronic cash ledger, and whatever credit they are availing earlier can be continued to avail. No need to proportionally reverse the credit is the meaning of that. Further, point number 7. Can e-commerce operator utilize its input tax credit to pay tax with respect to restaurant services supplied through e-commerce operator? First of all, who are you to pay GST by e-commerce operator? As a reverse charge, I am going to pay GST. As a reverse charge, you are going to pay the GST. You have to pay by electronic cash ledger. Utilization of input tax credit does not arise. Further, point number 8. Clarification by CBIC, Central Board of Indirect Taxes and Customs. Would supply of goods or services other than restaurant services through e-commerce operator be taxed at 5% without ITC? It may be, may not be. Restaurant services 5%, no ITC. If e-commerce operator providing his own services, whatever the GST applicable, that will be applicable. Maybe 5%, may not be 5%. Whatever rate applicable for the given supply of service, that will apply. Further, point number 9. Would restaurant services and goods or services other than restaurant services sold by restaurant to a customer under the same order be billed differently? Who shall be liable for raising invoice in such cases? Excellent. A restaurant service and goods or services other than restaurant services sold by a restaurant to a customer under the same order be billed differently. Who shall be liable for raising the invoice in such cases? Here, if you refer here, considering the liability to pay GST on supplies other than restaurant services through e-commerce operator and other compliance under this act, including issuance of invoice to a customer, continues to lie with the respective suppliers, and e-commerce operator being liable only to collect the tax at source on such supplies which is other than restaurant services. It is advisable that e-commerce operator raises separate bill on restaurant services in such cases where the e-commerce operator provides other supplies to a customer under the same order. Example, my dear, I am Mr. Raman supplying restaurant services through e-commerce operator, and to the restaurant service to whom the customer I am providing services, I am also providing other than restaurant services. What are they? Let us say I am selling to them, let us say the plate, aluminum plates I am also selling. I am a restaurant fellow selling the plates, separate bill, separate amount, supply of that goods, and also providing food, supply of services to a customer X. X is buying from me the aluminum plates as well as food item. These two I supplied to Mr. X through e-commerce operator. In that case, for aluminum plates and the food, in the two cases, the supplier should bill separate the value separate mentioned in the bill, and e-commerce operator liable for TCS for the aluminum plate if is applicable, but not for restaurant, because for restaurant services provided by Raman to Mr. X through e-commerce operator liable to pay GST. Is clear, my dear friends? Who will issue invoice in respect of restaurant services supplied through e-commerce operator, whether by the restaurant or by e-commerce operator? The invoice in respect of such restaurant services supplied through e-commerce operator under 9.5 will be issued by the e-commerce operator, because e-commerce operator liable to pay GST on restaurant services. Therefore, e-commerce operator issue the invoice. That means one simple example I will present here for your kind consideration. That will be more effective here to make you understand. Now listen, sir. Here Raman, supplier of plates and restaurant services. Plates value, let us say 10,000, restaurant services 5,000, totally 15,000 supplied to, let us say, Mr. X, who is a customer through e-commerce operator. Now in the given case, my dear friends, in the given case, if you carefully listen here, there are two supplies. Supply of goods, this is service through e-commerce operator supplied. Now who has to issue the bill? Raman should issue the bill for goods. E-commerce operator should issue the bill for service. Then e-commerce operator liable to TCS, for what amount? For rupees 10,000 goods, liable to TCS for rupees 10,000. No TCS for rupees 5,000, because it is covered under section 9.5 of the CGST Act. Who liable to pay GST? The entire GST liable to pay by the e-commerce operator for the given supply of services, restaurant services. Now in the given case, invoice should be issued by e-commerce operator for 5,000 rupees of services. Invoice issued by Raman for supply of goods. Is clear, my dear friends? Is the way in which clarification given by CBIC. Further, my dear sir, here furthermore point, clarification may be issued as regard reporting for restaurant services value and tax liability etc. in the GST return. Very simple to say that a number of other services are already notified under the section 9.5. In respect of such services, e-commerce operator are presently paying the GST by furnishing the details of the GSTR 3B. The e-commerce operator may, on services notified under 9.5, including on restaurant services provided through e-commerce operator, may continue to pay GST by furnishing the same GSTR 3B return, reporting them as outward taxable supplies for the time being. That means The e-commerce operator should not report in the GST 3B as their inward supplies. GST 3B they have to show for the time being as their output supply, though it may not be going to be count in the aggregate turnover of e-commerce operator. It should be aggregate turnover of the supplier only. Which one? Restaurant services supplied by a person through e-commerce operator. It is not a e-commerce operator inward supply to be reported in the GST 3B. GST 3B, what is to be reported as their outward supply? The restaurant services for the time being. Further, besides e-commerce operator may also for the time being furnish the details of the such supplies of restaurant services under section 9(5) of the CGST Act, as the case may be. For accounting purpose, registered persons supplying restaurant services through e-commerce operator under 9(5) will report such supply of services of restaurant made through e-commerce operator in table 8 of the GSTR 1 and GSTR 3B for the time being. That is, it falls on a reverse charge basis. Like that, the supplier should be shown in the GSTR 1 return. Is clear up, my dear friends? So, with this reverse charge mechanism, amendments is concluded. Hi, my dear friends. Continuation of amendments applicable for your November 2022 exam or the January 2023 exam, as the case may be, are as follows. Under this input tax credit chapter, one important amendment has been taken place. Section 16, subsection 2 of the CGST Act speaks conditions for availing the input tax credit, as you are aware of that. These are the conditions. Under this chapter, under this provision, there is a new clause has been inserted. Section 16, subsection 2, clause AA has been inserted. As per this clause, if a taxpayer who received his goods or services on his inward supply, he wants to avail the input tax credit, the supplier of such goods or services or both should upload the tax invoice in the GSTR 1 return, which is output tax liability of the supplier. If so, and the GSTR 1 return submitted by the supplier by mentioning the outward supply of the supplier, that will be input tax credit for the recipient, which is auto-populating in the GSTR 2A or 2B return of the recipient. Meaning thereby, supplier of that goods or services issue the tax invoice but not uploaded in his GSTR 1 return, that inward supply of the recipient cannot avail the input tax credit. Sir, earlier we have a particular rule number 36, sub number 4, where 5% of the input tax credit invoices which is uploaded, or the input tax credit of those invoices which is not uploaded, among the two, whichever is less, that concept we can avail. Not possible now, because that rule number 36, sub number 4 has been omitted by insertion of section 16, subsection 2, clause A. Rule number 36, sub number 4 has been omitted. That is this provision I am talking. I am talking about this provision. Rule number 36, sub rule number 4. It has been fully omitted. 5% of the eligible ITC or the actual ITC which is not uploaded in the GST1 return, whichever is less, this concept has been omitted. That means even a single rupee of input tax credit the recipient want to avail, the supplier should have been mentioned in the GST1 return, that invoice and submitted. Then only the credit will be reflecting in the books of the recipient in the GST 2A or 2B return, as the case may be. Further, my dear friends, from here furthermore referring to you, CBIC circular with regard to disallowing debit of amount from electronic credit ledger. What do you mean by disallowing debit amount of electronic credit ledger? One should understand this. Electronic credit ledger credit balance can be utilized by debiting electronic credit ledger. That means utilization of input tax credit is disallowed by the concerned officer of central tax. Disallowing debit of electronic credit ledger means disallowing utilization of input tax credit from electronic credit ledger. This entire clarifications of the CBIC presenting in front of you with the help of simplified manner is as follows. Now look here, my dear sir. Disallowing debit of electronic credit ledger. How to understand this? Rule number 86, capital A. In this regard, guidelines issued by the CBIC presenting one by one as follows. The commissioner or an officer authorized by him not below the rank of assistant commissioner must form an opinion for disallowing debit of an amount from electronic credit ledger where such disallowance is necessary for restricting him from utilizing or passing on fraudulently availed or ineligible input tax credit to protect the interest of the revenue. That means utilization of input tax credit from electronic credit ledger will be disallowed by the commissioner or an officer not below the rank of the assistant commissioner authorized by the commissioner. Must form an opinion. Important point here is must form an opinion in this regard. See, must form an opinion means a prima facie evidence there is fraudulently input tax credit has been availed by the taxpayer with material evidence in hand. Then the commissioner or the officer authorized by the commissioner not below the rank of the assistant commissioner under rule number 86 capital of the CGST rules can exercise disallowing debit of electronic credit ledger, meaning disallowing utilization of input tax credit. Further, my dear sir, disallowing debit of amount only after careful examination of all the facts of the case. Further, Continuation of this. See basic guidelines in this regard. The officer who has jurisdiction to disallow debit of electronic credit ledger, there is amount prescribed for the officer up to what value an officer is allowed to disallow debit of electronic credit ledger. Input tax credit less than or equal to 1 crore, up to that value of input tax credit can be disallowed by assistant commissioner or deputy commissioner of central tax or the state tax, as the case may be. More than 1 crore but less than or equal to 5 crores of input tax credit can be disallowed from utilization of input tax credit by the joint commissioner or additional commissioner. More than 5 crores of input tax credit can be disallowed from debiting electronic cash ledger by the commissioner or the principal commissioner. It is the jurisdiction of the adjudicating authority, in a simple terminology to say. Further, during audit under section 65 of the CGST Act, maybe department audit, or under section 66 of the CGST Act, audit by a practicing chartered accountant or by a practicing cost accountant. During that audit, it is noticed that any input tax credit has been fraudulently availed or is ineligible as per the grounds of mentioned under the rule number 86 capital A. The concerned commissioner or the principal commissioner of the CGST Audit Commissionerate may refer the same to the jurisdictional CGST Commissionerate for examination of the matter for exercise of power under rule number 86 capital A to protect the interest of the revenue, in simple terminology. Further, procedure for disallowance of utilization of input tax credit. First and foremost, input tax credit fraudulently availed or ineligible input tax credit availed by the registered person shall be prima facie ascertained based on the material evidence available or gathered on record. The reasons to believe, that is important to note, the reasons to believe shall be duly recorded by the concerned officer in writing on file before he proceed to disallow debit of electronic credit ledger. That means to say that not only must take scrupulous alert while disallowing debit of electronic credit ledger, but also reasons to believe fraudulently avail the input tax credit. Rule number 86 capital A is going to fit. In that case, first you have to record in writing, being an officer, on record, then proceed to disallow debit of input tax credit. Further, the amount disallowed for debit from electronic credit ledger should not be more than the amount of input tax credit which is believed to have been fraudulently availed or is ineligible. Assume a scenario: the taxpayer fraudulently availed ineligible input tax credit, let us say 1 crore 80 lakhs input tax credit availed in the books, 1 crore 80 lakh rupees. Disallowing debit of electronic credit ledger amount by the proper officer should be less than 1 crore 80 lakhs. It can be more than that. It's injustice, no? Suppose if a taxpayer fraudulently availed the input tax credit 1 crore 80 lakh rupees, and if the department officer disallowing my credit of 2 crores, injustice. That's why this provision has been mentioned. Further, the action to disallow such debit from electronic credit ledger shall be informed on the portal to the concerned registered person. Further, allowing debit of disallowed or restricted credit under rule number 86 capital A sub rule number 2, meaning what? Whatever disallowed from realization of input tax credit now permitting, in which circumstances are as follows. Concerned officer either on his own or based on the submissions made by the taxpayer with the material evidence may examine the matter and being satisfied either partially or fully may allow the use of the credit so disallowed or restricted up to the extent of eligibility. Reasons for allowing the debit of electronic credit ledger shall be duly recorded on file in writing before allowing such debit. Upon expiry of 1 year from the date of restriction, the registered person shall be able to debit input tax credit so disallowed, subject to any other action that may be taken against such person. In all the above cases, the investigation and adjudication are completed at the earliest well within the period of restriction, so that the due liability arising out of the same can be recovered, meaning thereby permitting the taxpayer to utilize the input tax credit if material evidence has been submitted, department satisfied. Otherwise, after 1 year of completion of the particular disallowing debit from electronic credit ledger, the taxpayer can avail that credit if there is no substantial evidence has been produced by the officer to disallow that credit. Further, my dear friends, referring to you now, after this particular provision, the chapter called as tax invoice, especially e-invoice, there we have some amendments. Even before entering into the chapter tax invoice, namely especially e-invoice, we have one more important chapter called registration under the GST. Here amendments has been taken place. What is the main amendment here means? A person who got registered without authentication of Aadhaar, or a person who applied newly for the want of registration, in both the cases, authentication of Aadhaar is made mandatory. Without authentication of the Aadhaar, you are not eligible to avail registration under the GST. So, keeping this amendment referring to you now, from 1st January 2022, Aadhaar authentication mandatory for the new registrations as well as for the existing registered persons under the GST. In this regard, the physical verification of the premises of the applicant by the department ruled out. Meaning thereby, if you refer here in this process, this and all I referred in regular class. Now presenting here the concept, if the application made by the applicant found to be in order, no deficit is there, applicant undergone Aadhaar authentication number and also biometric information along with the photograph and other KYC documents successfully, then GST RAG 06, namely certificate of registration, will be granted within 7 working days. Further, a registered person who has been issued a certificate of registration under the GST shall undergo authentication of Aadhaar number of the proprietor in the case of sole proprietorship, partner in the case of partnership firm, Karta in the case of HUF, managing director, whole-time director, any other member of the managing committee in the case of company, body, corporate, or trustees in the case of a trust, is any trustee whose Aadhaar authentication should be undergone. And the authorized signatory, as the case may be, the person who given Aadhaar authentication number will be the authorized signatory in this regard. In this process, I am bringing furthermore points. After Aadhaar authentication, such person is also eligible for the following purposes: for filing of application for revocation of cancellation of registration, filing of refund application in the form GST RFD 01, for refund of the IGST paid on the goods exported out of India. If an Aadhaar number is not assigned to an existing registered person, such person shall be offered alternate and viable means of identification in the prescribed manner. Such manner has been prescribed by rule number 10B as follows: such person shall furnish his or her Aadhaar enrollment ID slip and bank passbook with photograph or voter identification card issued by the Election Commission of India, or passport or driving license issued by licensing authority, as the case may be, along with the Aadhaar enrollment ID to be submitted. That means among these 4 points, anyone along with the Aadhaar ID, Aadhaar enrollment ID, if Aadhaar number is not allotted for an existing registered person. Further, my dear friends, such person shall undergo Aadhaar authentication within a period of 30 days of the allotment of the Aadhaar number. Is clear? This is what the main amendment in the registration chapter, followed by, already covered and again referring, these products, manufacture of ice cream, pan masala, tobacco substitutes, air and water, fly ash bricks, bricks of fossil meal, building bricks, the roofing tiles are considered. If you are a manufacturer, for you the maximum threshold limit for registration 40 lakhs not applicable. It remains 20 lakhs or maybe 10 lakhs as the case may be, but not 40 lakhs. Now referring to you, my dear sir, tax invoice, debit note, credit note, under this chapter, the major amendment, the e-invoice, which is made mandatory, even the aggregate turnover in the preceding financial year exceeds 20 crore. This is an amendment with effect from 1st April 2022. Further, presenting here, applicability of dynamic quick response code. Applicability of dynamic quick response code, in short QR code, especially a transaction from B to C, namely from a registered person to unregistered person, where in the tax invoice mentioning of QR code is mandatory. Yes, absolutely mandatory. A e-invoice issued by a taxpayer to unregistered person where the transaction is called B2C, mentioning of QR code is made mandatory. Now, in this process, my dear sir, clarification given by the CBIC where it is mandatory, where it is not required to be mandatory, namely mentioning of QR code in the tax invoice not warranted. In which situation? Clarification given by the CBIC in this regard, presenting in a diagrammatic presentation. Just look and understand. Mr. Indian, supplier of service. Mr. Indian, supplier of service. Mr. Foreigner, who is from outside India. Mr. Outside India, who is a recipient of service. Supplier provide the taxable services to a place outside India, but the place of supply is in India. That means location of supplier in India, place of supply is in India. It will attract IGST as per the IGST Act. Now, the person who is the recipient outside India is not going to utilize QR code at all, who has no registration under the GST. Obviously, in that case, this transaction will be called as B2C. Mentioning of quick response code, is it mandatory? Law says not required to mention the QR code, which is not warranted for a person who is outside India. He is not going to do anything with that. In this regard, even though the payment realized from the recipient to the supplier may be in the foreign currency through approved Reserve Bank of India channels, or it may be received by the supplier from the recipient in Indian rupees, wherever approved by the Reserve Bank of India through Reserve Bank of India approved channels, if the payment received in foreign currency or payment received in the Indian currency, as the case may be, in the given scenario, supplier issue the invoice treating it as a supply to uninsured person, B2C, mentioning of QR code, quick response code is not warranted. E-invoice issued without having dynamic quick response code, it is permitted. Further, applicability of dynamic quick response code in case of B2C invoice, here is mandatory. When, look here, a person who is Mr. Taxpayer, supplier in India, supplied taxable goods or services or both to a foreign embassy in India, which is United States Embassy in New Delhi. Here recipient is United States Embassy in New Delhi, a foreign embassy in India. Who is the recipient? Now, such a recipient holding UIN number under the GST, unique identification number. If supply taken place to them, services supplied or goods supplied, invoice issued shall be considered as invoice issued for a B2C supply. Sir, the recipient foreign embassy in India holding UIN number, sir, registered person, no, sorry. If you are holding the UIN number, you are not a registered person as referred under section 2, subsection 94 of the CGST Act. If you refer that provision, section 2, subsection 94 of CGST Act, registered person means a person who is registered under the section 25 but does not include a person having unique identification number. Therefore, this given transaction will be called as, this particular given transaction, the entire transaction is called as, from supplier to the recipient, is called as B2C. If that is the case, my dear sir, mentioning of QR code in the e-invoice, is it mandatory? The law of the land says absolutely mandatory. In the given case, the B2C transaction, hey Mr. Supplier, you must mention quick response code in your invoice. E-invoice should be issued having dynamic quick response code. Got the clarity, my dear friends? It is as simple as this. With this, we concluded the tax invoice, especially e-invoice, followed by dynamic quick response code in the case where a transaction is B2C. If so, mentioning of QR code in the invoice is mandatory or not. I explained to you, which is generally mandatory, but in specific cases the law says not required to mention. Is it got clarity, my dear friends?